Today, we're going to talk about the S&P 500, Bitcoin, Ethereum, MegaWeapon, and also Kitty Inu. We'll discuss today's FOMC statement and press conference. I'll share with you guys what I'm seeing in the markets short term and also where I think the markets could go over the next 12 months. Now, if you guys are enjoying this content, be sure to subscribe to the channel and click the bell icon to get notifications because I am putting out these videos every day, Monday through Friday. All right, so looking at the S&P 500, I want to start here because yeah, it's not a crypto, but this is what everybody is watching right now with inflation rising. Okay, and also the Fed talking about raising rates and tapering. This is a hot topic right now because back here during the March 2020 sell-off from COVID, we got a very accommodative stance from the Fed. So they said, you know what, we're going to keep rates low and we're going to ramp up our asset purchase program to really get the markets and the economy moving again. And right now, okay, back here, they started to talk about doing the opposite, right? Raising rates and also tapering. So that's obviously caused a decent sell-off here from the S&P 500, which has put it below this long-running ascending channel. Now, before we talk about technicals, I do want to just kind of share some thoughts I have on the overall market as far as where this could be going over the next 12 months. So I know a lot of people right now are very concerned that we are going to see something like we saw back here in March 2020, where the market just continues to sell off. And I tend to think that we're not going to see that, okay? Or at least if that does happen, that the Fed will step in. Because we've seen it time and time again. We saw it in 2018 and again in 2020 where the Fed did step in when markets started to correct. In 2020, it took a 35% correction. In 2018, it took only a 20% correction. The one outlier from those two scenarios is the inflation. We did not have inflation then like we do now. However, I personally think that if it comes down to market stability or inflation, I think that the Fed is going to choose market stability every time, okay? Not necessarily right now, just because the market isn't that far off its all-time high. But if we were to see the market come down here toward, let's say 4,000 or even just below it and start to correct 15 or 20%, the Fed is absolutely going to take notice of that. And I just don't think that they are going to let the stock market collapse after they've built it up like this. They can't afford to do that. That doesn't mean it will happen, but I just don't think they can allow it to collapse after they've built this up in the way they have. Furthermore, I know it's become sort of a meme, but transitory inflation, let's talk about that for a moment. Because over the past, let's say 20 months or so, we've seen a scenario where because of the pandemic, we had a lot of supply chain bottlenecks. We still have those bottlenecks out there. At the same time, governments were sending out checks to families to encourage spending. So on the one hand, you had supply chain bottlenecks, which brought the supply lower. And on the other, you had demand rising as households got money from the government. And so you had this imbalance, and you still have an imbalance in the market. Now, a lot of that has caused inflation. Okay, so obviously if you have demand high, supply is low, then prices are going to go up. Now, when those supply chain bottlenecks start to clear up, you're going to see supply come back up and demand come back down as governments stop sending out checks in the way that they were before. Okay, so they're going to reach an equilibrium between demand and supply to where we're going to see some of that inflation that we've seen roll off. Now, this is just a theory of mine for the moment. It doesn't mean that it's going to happen, but I do think there's a very good chance that we see inflation actually tick lower later this year. So imagine a scenario where the stock market continues to sell off and panic over the tightening that the Fed is doing right now. And then we also later this year get inflation ticking a little bit lower. I think that that introduces a really interesting scenario where we could see one more melt up later this year. And in fact, I think that's pretty likely. Furthermore, everybody's talking about a crash right now in both crypto and the stock market. And markets don't tend to crash when everybody's expecting it. They crash when nobody's expecting it and they're going vertical. So the fact that right now everybody's talking about a crash in the stock market and Bitcoin going back to $20,000 or below, I tend to think that we get the opposite, okay? It doesn't mean that the stock market is going to just shoot higher tomorrow because I don't think we're in that environment anymore. We could see more consolidation, potentially even a move down here toward 4,000 or even lower before we get that melt up later this year. But I do think for the reasons I just explained, I do think that it is actually more likely than what a lot of people are giving it credit for. Okay, now let's talk about some technicals here for the S&P 500. So at the moment, this area right around 4240 is serving as support. So you can see back here with support before that resistance. And I tweeted this out actually when the market was pretty much at the low just a couple days ago at 42.40, maybe just below it. And I said this was support. We're likely to get a bounce from here, potentially back toward 4,500. You can see back here was support and resistance before that. So really the market is still kind of trapped in that range between 42.40 and 4,500. If it can get above 4,500, then it's probably moving up here to test 4,700. Alternatively, close below 42.40, we're probably looking at the $4,000 psychological area, which has also been a technical factor in the past. Okay, so as I just said, I do expect later this year, there's a good chance for one last melt up from risk assets before we get that correction either late 2022 or into 2023. All of that is just a theory for now. It's speculation, but that's really all we can do at the moment. Now, just one last thing though, before we move on to Bitcoin, just keep in mind, as I said, it does not mean that the market does this tomorrow. Okay, we could see consolidation here. We could see lower prices first before we get that melt up later this year. All right, so next let's take a look at Bitcoin. So we have talked about the $35,000 area for the last few weeks. And as many of you know, I was buying Bitcoin ever since 42 all the way down to 35. All right, so my average rate is right around 38. So just earlier today, I was actually at break even on the trade. I haven't taken profit on it yet because this is a spot only position. So I'm not using any leverage at all. And it's also not really money I need. So I bought this with a spot only account and I'm fine with taking some heat here. I rode this all the way down to 33. But the reason I stayed in that position is because the market never closed below the $35,000 area. So that was always kind of the line in the sand for me, where if we got to close below 35, it was likely that we were going to see Bitcoin move down here toward 30. All right, but as long as we're staying above it, then 40 to 42 is going to be the big test for the market. So you can see we have the trend line off the April high and also several lows through this area. So Bitcoin has to reclaim 40 to 42,000 to turn bullish up here toward 45 to 46, followed by potentially 50,000. All right, now alternatively, like I said, if we were to see a close below 35, that would open up $30,000. So it's really that simple. The market is kind of caught in this range right now between 35,000 support and that area between 40 and 42,000 as resistance. Now we are seeing some weakness today. So following today's FOMC, you can see where Bitcoin tested the $39,000 area. It came very close to 40,000, but not quite. And we are seeing a bit of a reversal today. So not really a surprise because I did expect some consolidation through this area. So just like what I mentioned with the S&P 500, don't think that we're going to see the market just do this. All right, this is going to take time. We're going to see either consolidation through here for the next few weeks, or we could potentially see that break below 35 down to $30,000. That is always a potential. So we have to at least consider that. We have to plan for it just in case. But that said, I would like to see 35 stay intact as support in order for this market to stay constructive. Okay, I want to see a higher low develop here. So 35 is going to be support, again, above 40 to 42, opens up 45,000 to 46,000, followed by that $50,000 area. Okay, so it's going to take time, guys. Don't expect the market to go straight up. Could we break below 35? Yes, but for right now, I do think we're dealing with a ranging market between 35,000 and that 40 to $42,000 area. All right, so next up is Ethereum, which is in a very similar situation in that it is very range bound. So you can see where today tested the bottom of this descending channel that the market was in over the past few months. All right, so it broke below channel support recently and retested that level as resistance today. So at the moment, the market is just kind of caught between this area just above 2,600 and also this area down here at 2,200 support. So if you notice back here, 2,200 was support and then resistance. So it's no surprise to see buyers defending at that area right now. Now, if we were to see the market close below 2,200, the next support area is going to be the bottom of this equidistant channel, somewhere around $2,000, maybe just below it. Now, alternatively, if Ethereum can reclaim this area up here, right around 2,600, so close back above this level, then we could see a move up toward 2,800 and potentially $3,100. But for now, the market is very range bound. So we could see, a few more days of ranging price action here. But at some point, the market is going to have to make a decision. Does it close below 2,200 or above 2,600 for that move higher? So really nothing definitive yet from Ethereum. To me, not financial advice, but the most or the highest conviction trade here would really be a reclaim of this level, but then also a reclaim up here. All right, so reclaim this area right around $2,900, maybe $3,000 for that move up here toward 36, maybe $4,000. That would be kind of the highest conviction play here, in my opinion. Will it happen? I don't know. We'll have to wait and see. But alternatively, again, I think this area down here is going to be incredibly strong support. It's very close to these lows. And again, it's also the bottom of that large equidistant channel. So next up is MegaWeapon. The token is Weapon. This is a play to earn token that I was buying back here in December, just above $1. All right, so in this area above $1, I also bought recently on this dip down here toward $1.40. All right, now you can see where this market, and let me preface this actually with saying that technical patterns with microcaps like this are not as reliable as something with Bitcoin or Ethereum, just because the volume isn't here. Okay, so take this with a grain of salt, and that's the case for any technical pattern that can all break down. But right now, the market has been carving this potential ascending channel ever since back here during its inception in November. So you can see we got the move up here toward 350 or so. We had a new higher high back here just slightly, but the market failed to break this all-time high up here. Okay, so since that time, we've had these higher lows develop. Now, as long as this one holds, okay, so right around $1.40, if this holds and we see the market come back here toward resistance, then you're going to want to start watching for a potential breakout here over the coming weeks. And because this is a terminal pattern, you can see where the apex of this pattern comes in somewhere in late February. So what that means is that Weapon has to break out over the next 3 to 4 weeks. Now, we don't know if that breakout's going to be higher or lower, but given the fact that they have staking coming out soon in the next few weeks, and also the full game later this quarter, I do think that we're going to get a break higher from this pattern and not lower. So again, I'm in this one, and I do think that this has a lot of potential even this year, regardless of market conditions, because as I've said before, I think that solid play to earn projects like this are going to do well regardless of the market conditions. Obviously, if we're in a full-blown bull market, these projects are going to do better. But even if we're not, I still think that people are going to play the games because they want to make money, and they're going to be just wasting time until the next bull market. So I think that these solid play to earn projects are going to do very well, even if the overall market is down. And one last thing too, if you want to see what the objective is of this pattern, so one way to do that is, in this case, you can either do a percentage objective or you can do a price objective. All right, so if we do a percentage objective, then you're looking at a move of approximately 500% from the breakout point or up toward $20, maybe just above it. Obviously, if you did the dollar amount, then you'd be looking at about $3 above this area, right around $3.50 to $4, or somewhere around the $7 range. Personally, I think over the next few months with staking and a full game launched, I think that $7 is still way too low considering there's only 10 million tokens. So right now the market cap is sitting right around a $16 million market cap. And at $7, it would still only be a $70 million market cap. So to me, far too low for a project with staking and a full game. Something like $20 over the coming months or $200 million market cap is much more realistic in my opinion. Now, last but not least, let's talk about Kitty Inu. All right, so this is a project, another play to earn project that I was buying back here in late October. Now, obviously the market had, this project had a huge run up shortly after I bought in. I did not sell any tokens because I think that the potential here is much greater once they launch the game, which is coming later this quarter. Okay, so I went ahead and averaged down on this dip and also once again through here. So I've averaged down a couple of times here recently, just because they do have the beta release of their Kitty Kart game coming out in the next few weeks. So it's a play to earn game where you can essentially race, think of Mario Kart, but with your favorite NFT or meme characters. They're also incorporating AI and also the metaverse in their project, so they're hitting all of the hot topics right now. And right now, the market cap is somewhere right around $12 million. In my opinion, that's still far too low for this project, considering that, again, they have the beta version coming out in the next few weeks and also the full game later this quarter. Now, looking at the technicals, we have a potential falling wedge here that's developed off of this high. So at the moment, you can see where this market is moving lower, forming lower highs and lower lows, but you can notice where these lower lows are at a less steep angle as the highs, okay? So we're getting this kind of falling wedge here, which is a bullish pattern, okay? So if we see the market break out over the coming days, then this area up here is going to be the next resistance. Obviously, these highs through here will also attract some sellers, but the next resistance is really going to be up here in this area. All right, but long term though, I think that this market or this project has a lot of potential. Even later this year, 10x, 20x is not out of the question, even if the overall crypto market is not doing well, just because, like I said, with MegaWeapon, I do think people are going to play these games in a bear market, bull market. It's not going to matter. All right, everyone. So I hope that helped. I know there's a lot going on out there in the markets right now, a lot of indecision, a lot of fear, especially with everything that central banks are doing right now with rates and tapering, etc. But just keep in mind that what I said at the beginning of this video, that there is a very good chance if we do see the market move lower, the stock market move lower, and also inflation start to tick down, then there is a very good chance, in my opinion, that we do get one last melt up later this year. All right, so no guarantees, just a theory for now, but it's going to be interesting to see how it plays out regardless. All right, guys, I hope you found the video helpful. If you did, be sure to subscribe, click the bell icon, smash that like button, and also leave your comment below. I will talk to you guys again tomorrow.